Good afternoon and welcome to Bull Market Stock Show. This is your host Rian Hobson, and we're doing actually the stimulus plan, or I would say the infrastructure plan of Joe Biden that was announced yesterday, which came to a whopping amount of that he wants to push through about 6 trillion US dollars. Now that came in yesterday. Also, the news of the core PCE that I spoke about the whole week. That was quite a bumper number if you need to compare to quarter over quarter numbers. The previous was exit 1.3. That was now for core PCE, and then 1.5 at PCE. So that was now the previous number. Then it came in line with forecast at 2.3, and then 3.5 for PCE inflation. Now that shows that the U.S. consumer is actually spending, and that is obviously the translating. That's why the other inflation numbers are so high. That is now CPI and also then core CPI. Now at 2:30, there's also very important news that will come through, and I think that news will actually push the dollar further if that news come out positive. As I see the dollar have a strong run, and as I've been saying, it's actually your best bet is actually the dollar to buy, not just for the big stimulus plan of Joe Biden, but also the news that will come out at 2:30. That is now the personal income and personal expenditure. If that numbers is also big, which I do expect, if that numbers come out strong, then the dollar will get some further weight later in the day, obviously in the U.S. session, to start around 4:30, and then it can move further on. Now, the personal income and the personal spending number, it shows actually the strength of the consumer of the United States, and that actually will actually push the dollar further, and that can translate to where the stocks can actually go down, like the Nasdaq, the Dow Jones, other stocks across the world. For example, also the equities in South Africa, which is now at the Johannesburg Stock Exchange. You can the UK 100 can also go down, or the FTSE 100 can also down. Basically, everything can go down because the economy is already hot, and he just add more fuel onto the economy now. Which is now Joe Biden, and I mean, it smells like trouble. The Federal Reserve will definitely not have any plan, or they can drain the system, but their plans will be limited because then they need to stop tapering. They need definitely, excuse me, to raise interest rates quicker and faster, to slam on the brakes. Because inflation will be too hot at the end of the day, because you have already a hot economy. Now with the 600 trillion stimulus plan, the Federal Reserve will have to move quicker, and that will put pain on the equity market, share market, even with commodities as well. That is what I'm talking about now, is about in the short term, which can maybe last until say maybe July or like that, there around, and then maybe it can turn around. But they pushing this very quickly and very fast through, and I think the main reason is because there is midterm elections coming this year, and which is a high possibility that the Republicans can basically win the House, and then that could actually lead to blockages for their stimulus plan. So they're rushing this whole entire infrastructure plan so that they can have the money available for their plans. Listen, this is extremely, extremely dangerous. On top of that, Janet Yellen was also making comments yesterday that the debt to GDP ratio will push over the 100% mark. Excuse me. Now, what that means is that the debt in the United States will be approximately about 30 trillion US dollars. That is enormous. Now, that will not sit well with the bond vigilantes. They will definitely want a higher yield, and with that, they will start to sell. That will push up yields. They will start to sell their bonds and move somewhere else their money, maybe buying stocks, or something, or just sit with the money. But the bond market will definitely rattle when I thought it would have rattled yesterday because of that statement of Janet Yellen, but it didn't. So I think surely it will, when the Federal Reserve, when it comes closer to the Federal Reserve of the FOMC meeting, then definitely they will start to sell the bonds, because it doesn't make sense. You are into bonds, but you're getting a negative return. So obviously they will start to scream. They will start to sell their bonds, because what is currently going on is a bit berserk. You have 6 trillion fresh money that will come into the economy, and the economy is already hot. So your best bet there is basically the dollar. When the dollar goes up, everything basically goes down. The rand, the equities, the stocks, you name it. Because the fear of the Federal Reserve that will have to slam the brakes quickly. And I think the Federal Reserve will definitely slam that brakes quickly. I think they will definitely start talking about tapering in June, and how they're going to do that. And also they need to come up with a plan to say, listen, they need to hike up interest rates in 2022. Is rather they do that, or they sit with a useless currency. Because if they are too soft, for example, they're just talking about tapering and not talking about lifting up the interest rates, then it means that it will just continue. And that will lead to a steep sell-off of the dollar, because you're just keeping the economy running hot. So they need to come up by saying, listen, they will slam on the brakes maybe end of this year or next year. And also they will start to print less money. And these guys want to actually to get this deal done because of the interest rates that are so low. And with the bond vigilantes, the people that borrow the money to the US government, excuse me, to the US government, they are getting basically nothing in return. So the bond vigilantes will definitely scream. And for that, I think your best bet for now, until I would say July, is definitely to buy the dollar, or maybe until June, is definitely to buy the dollar. Also, it depends on what the Federal Reserve is saying in the June meeting. But as things stand, I think the Federal Reserve will definitely will become hawkish in June because of this 6 trillion stimulus package. That will not be nice for the equity and stock market because of the Federal Reserve that's tightening up policy. But I think they don't have a choice but to do it, because this 6 trillion is a bit too heavy and they need to slam on the brakes. Please be on the lookout for the news at 2:30, your personal income and your personal expenditure. Please take a look at that. If that number come out strong, it will definitely push the dollar further. It will push gold definitely down. I'm just not sure on Bitcoin, but definitely it will push the dollar higher up. Commodities, that will definitely go down when the news come out at 2:30. So please be on the lookout for that news. It's very important news, although the other calendars don't show it as important. But because of today's situation, it is about inflation and how strong the US consumer is. And that's why that news is important. So please be on the lookout for 2:30, and all the best with trading. And then I will see you guys on Monday. So also have a lovely weekend. See you guys on Monday. Bye-bye.